Hi everyone, my name is Melanie and today I'm going to do a stock pitch on Upstart. My recommendation is a strong buy. Its current price is 128.6 with an upside of 39% and a downside of 13%. Now, Upstart was founded in 2012 by former top Google executives and recently went public in December 2020. The thesis of the company can be explained by a scenario co-founder Paul Gu faced in his college days. Now, Paul was a valedictorian, a double major at Yale, and a part of Peter Thiel's 20 under 20 making six figures. Very bright kid. Now, when he was searching for personal loans, his first one he got rejected, and his second one quoted at APR of 27%, which you all know is very high. Now, the metrics of underwriting loans failed Paul, who should have been seen as a lower risk because of his income and because of his accomplishments. So the thesis is that most people are left in the cold paying too much for credit, and there needs to be a better model underwriting people. That's where Upstart came in, with advanced AI and machine learning modeling to underwrite personal loans using 1,600 plus variables rather than just a FICO score. Now, they are resulting in 75% fewer defaults at same approval rates of larger US banks. Now, Upstart operates only in the United States as of now, 2020 sales at 240 million and year-over-year growth of sales and earnings. They are expanding into new revenue streams, but have proven profitable with bank partners using Upstart services to underwrite loans, as well as making personal loans through its own charter bank, as well as offering software as a service and credit cards. Now, Upstart strategies are to offer loan products to Americans who are underserved in prime credit, who have identified as lower risk of default using AI and machine learning. Many of these are being younger people who don't have a lengthy credit history, like Paul. Another strategy is horizontal integration into new product lines, including car loans and other lines. Why I think Upstart is a strong buy is first their growth from 44% growth in 2020, projected growth of 110% in 2021. Earnings power is a chief driver of valuation, and the rapid growth and new earnings avenues is proving Upstart as approaching high earnings power. Next is their innovation in lending industry with constantly improved underwriting algorithms with the use of AI. Lastly, their reinvestment strategies will also drive significant growth. They're closing a large deal Q2 with Prodigy that will allow them to enter into the car loan market, as well as never taking on traditional risk that lenders take on because of their use of bank partners and charter banks. Now, they have stable sales growth with a CAGR at 60%. Data is limited because it went public, so it only reaches back to 2017, but we can see year-over-year growth and year-over-year growth in EBITDA. Now, my two catalysts that we will see move the price is the acquisition of Prodigy, which it closes in Q2. Now, Prodigy alone has financed more than $2 billion in vehicle sales, which Upstart will start underwriting by Q3 this year. Another catalyst is their earnings call. We have seen this on March 17th when earnings came out, the stock soared 96% due to the more than expected growth of 38% quarter over quarter. Next one is June 16th, which is on track, according to the CEO, to beat projections with their additional banking partners. Now, we're not going to see another 96% growth, but we're definitely going to see that price move. Now, let's move on to the DCF analysis. In terms of downside risk, we can see a share price of 111.3, which is 13% lower than market, with contribution margins projected at 41%, sales projected at 500 million, and the acquisition of Prodigy, we have an upside case at 182.5, which is a 39% upside. Now, fintechs ranges on multiples, and Upstart is a newly public company, so it's difficult to measure. They're currently trading at a 36 times multiple based on their 2020 sales. However, their sales numbers are changing rapidly, as well as new reinvestments and new public offerings. So what I would like to take a look at is their competitive advantages, since they are in the earlier growth stages. They have highest growth in any other comp, they have the lowest default rates, and they provide a cheaper loan because of the way that they underwrite risk. We have seen the stock double multiple times since its IPO due to its outperforming nature, which is why we see the 52-week high-low spread so large. And the broker estimates are not a good metric because the last one that came out was before the March 17th earnings. So what I wanted to take a look at is a DCF, which is why the price target is at 182. Now, two risks that they face is one is something called conversion funnel, which is a rate at which they can convert interested customers into action of taking a loan. This is being mitigated by new marketing campaigns to reach younger populations that have limited access to credit through targeted online advertising. They have quadrupled their marketing budget in 2020, and we will see the effects of this in 2021 and on. Another risk is retraction in the market, like a recession. Now, COVID has suppressed loans and created high risk for personal loans due to higher unemployment and other factors, but a mitigant of this is one, the recovering economy from 2020, and two, that the AI machine is constantly improving itself with more data, so the chaotic market of COVID prepared it for more complex market conditions for the future. In conclusion, I recommend Upstart as a strong buy. With its outperforming growth, serving underserved customers, offering a cheaper product, yields that upside of 39%. There is more upside than downside with exciting catalysts in the near future. Thank you all. That's my presentation.